This is Daybreak Asia. We're counting down to Asia's major market opens, and Haidi, the really big event this hour is going to be the BOJ Governor Ueda speaking at a conference. That's the BOJ IMES conference, and I was just looking at the theme of that. It's old and new challenges for monetary policy, but of course, certainly the BOJ seems to be confronting both of those.
I was going to say that's pretty apt given the nature of, the thematic challenges that face the Bank of Japan, right, as it looks into this, beyond, actually having interest rates beyond negative territory. So some interesting conversation to be sure, particularly as we've seen kind of a degree of, patience or comfort in terms of where Japanese bond yields are travelling, as well as some of the weakness that we've seen in the economy as well.
Yeah, that's right. And lots to be discussing as well in terms of the market action this morning for Japan in particular, because you've got that JGB 10-year yield sitting at a 12-year high this morning, unchanged right now, but it has really been very interesting to monitor given those changing expectations. Traders are really agitating for the BOJ to shift its policy settings higher. That's also been playing into the yen dynamics, and we've seen that very much sensitive to the yield gap between the BOJ and the Fed. And this morning here, fairly steady, but tracking around that 157 level. Stocks-wise, we don't have too much of a lead-in from Wall Street. It was a fairly quiet session on Friday, but we did see a bit of a recovery of sorts. US markets are shut Monday for a public holiday, but certainly, as we said, the action and the focus on Governor Ueda, who starts speaking this hour. Let's change on. Quick check on what's happening in Korea today, because the focus there is more on its value-up programs. We've actually got the country really pushing more companies to take part in that. That's from the bourse there, in Korea, and as well geopolitical flavors that are going to be impacting, because we've seen that trilat between South Korea, between Japan, between the US, and it's really that big watch on supply chains and China really pushing to ensure a stable supply for its tech ambitions, essentially, Haidi.
Yeah, take a look at how we're trading at the start of the cash session. Pretty slow to come online sort of fully, of course, here in Australia, but we are expecting a little bit of more upside, that support from the Wall Street session again on these sort of Fed easing hopes that will be hopefully sort of either dashed or consolidated by the inflation numbers that we get this week, right? The Aussie dollar is in focus, a little bit of weakness there. There are some concerns that we may have seen kind of the best of it in terms of getting to that key level of 69. We've seen about a 2% gain in May for the Aussie dollar, and certainly there are worries about some of the domestic weakness, as well as question marks over China's policies to support the property sector are starting to pull down sentiment a little bit there. No Treasury trading, as Belle mentioned, it is a holiday in the US, but we are watching Treasury futures that look like this. Some of these bond traders that have been kind of in this waiting game over what the Fed will do next could get some support from Treasury in the middle of the week. For the first time since the early 2000s, we're seeing a series of buybacks targeting seasoned and harder to trade debt. We're also getting the tapering of the balance sheet unwind as well, starting in June. So we'll be looking ahead to that, to quantitative tightening. So, Belle, a lot to contend with at the moment as we kick off the trading week.
Yeah, that's right. And also it's that sort of general theme that's developing around desynchronization, because you're seeing a lot of different economies that are responding differently to higher rates, and also there's different price pressures as well. So our next guest actually really focuses on that theme of divergence, because he says it's the name of the game. Global economies, they are increasingly moving out of sync here. Joining us this morning from the Hong Kong studio is David Chow. He's global market strategist for Asia Pacific at Invesco. And David, when you're in that sort of environment where economies aren't moving in lockstep, where are the best markets to play in Asia, do you think, at this point in time?
Well, I think that there's quite a few things that are going on here that investors should be keeping an eye on. In Asia, we're starting to see green shoots in Chinese growth. In Japan and Korea, we continue to see some robustness in the AI-related investment trends there. And Southeast Asia is starting to reaccelerate. So I think that for the most part, EM Asia is starting to show better signals.
And so when it comes to EM Asia in particular, are there any specific markets that stand out to you? And what's the sort of upside that you're looking for in this scenario?
Well, if we look at the recent developments in the AI trend, we saw both earnings estimates beat from NVIDIA. That certainly shows that the AI trend still has legs. I think this is a multi-year trend. And in places like Taiwan and Korea, their stock markets are significantly overweight on AI-related technologies. So I think that these are interesting places to invest in.
David, it's interesting you talk about EMs. When it comes to the performance of certain EMs, are you seeing a weakening correlation with China there? And does it very much determine where we go next for the US dollar?
I think that China and EM are interchangeably, they're very much linked because China both occupies a significant portion of the MSCI EM index. China's growth is also very important for the rest of Asia. And I think that all eyes are on whether that consumption spending can start to pick up perhaps in the second half of this year.
David, one of the questions over the sort of AI and chip fervor trade is how you identify the next stage of opportunity for AI, right? Do you have any sort of ideas around what the sort of medium-term and longer-term opportunities might be beyond just the initial phase?
Sure. I think that the bigger question is how does the AI development, how do we frame it? In regards to previous technologies? Well, I think that it's closer to what we saw with the internet development 20, 30 years ago, which was really a game changer. Will AI have a similar type of impact? Perhaps not as much, but it certainly is going to increase the total factor productivity within economies. And there's significant numbers of opportunities I think that investors can play, both from downstream, whether it's energy related, power producers that are very integral towards the manufacturing of AI-related technologies. To the upstream version where there's AI applications, we think of places like in China that continue to have significant developments there.
David, as we said, we're awaiting the BOJ governor waited to speak at a conference. I believe he's just started now. But whilst we wait for any sort of headlines, I'm interested in your views on the Japanese story. Do you think that we're likely to see further upside for Japanese stocks from here? And do you have this conviction as well that we're shifting into an inflationary environment in Japan?
Well, I have conviction that the Japanese economy is really starting to show some very positive signs of structural growth. And that really is after decades of kind of flagging growth there. And that's really driven by both capital expenditures from private enterprises and starting to see some improvements in household spending. So, we continue to have an overweight on both the Japanese yen and on Japanese equities. They're both cyclical and structural reasons why we like Japanese equities from this angle. I still think that Japanese equities are going to be the best performing developed market asset class this year.
Is it an environment, though, where you need to be a little bit more selective for Japanese stocks? Are there any specific sectors that stand out to you in particular?
Well, on the one hand, growth and technology stocks continue to be very attractive given the recent AI trend. But also as growth starts to broaden out within Japanese equities, so far this year, foreign capital has been pouring into those large conglomerates in Japan. And I think the rally is going to broaden out in the second half of this year. So kind of mid-cap stocks in Japan should start to work as well.
And outside of Japan, of course, there are other markets that you're tracking. What are you looking at in terms of the bond space in particular and credit spreads? Are you seeing any sort of opportunities there?
Sure. I think the bond market continues to be quite attractive given where yields are and the uncertainty of the Fed's monetary path forward. I think that investors can continue to look at kind of the medium term, the intermediate part of the yield curve. That's where I think the sweet spot is. And also, I really like higher quality non-investment grade debt, things like senior loans, bank loans, and also private credit credit, and also real estate continues to be quite attractive with these yields at these levels.
David, really great to have you with us. David Chow, Global Market Strategist for Asia Pacific at Invesco. Let's take a look at some of the early movers that we are watching. ESA is one of them as we continue to kind of see the developments when it comes to Alzheimer's treatment. We're hearing that Leqembi has improved in South Korea, so that's a major hurdle there. Watching a little bit of upside there, trading in ESA. Of course, it's always a very volatile stock. They're up just about 0.2% there. The ESA and Biogen saying that Leqembi has been approved in the South Korean market for treatment in adult patients with mild cognitive impairment due to the disease. We are also watching BHP here in the Australian session. A little bit of upside so far. We're just about 10 minutes into the start of cash trading. Anglo shareholders saying that BHP should amend the structure or come back with a better bid. So, of course, we're waiting for that extended deadline there for BHP Group to potentially come back with a proposed restructure of their proposal.
And still ahead, Heidi, we'll have the French Finance Minister Bruno Le Maire saying the entire world economy is at risk from a glut of cheap Chinese exports. That's our exclusive interview still ahead. But first, on that China theme, we've heard Beijing seeking South Korea to maintain stable supply chains as they begin their first three-way summit with Japan since 2019. We'll have details on that. This is Bloomberg. You're taking a look at some live pictures here of the BOJ Governor Ueda speaking at a conference. This is really relating to the BOJ's direction for monetary policy ahead, but what he's hearing or what he's saying here, according to the text of his speech that's been released, but essentially that we need to really rethink or re-anchor our inflation expectations, and some challenges are very difficult as well that are facing policymakers in Japan. We've been discussing some of those, but really that weaker yen and how much that's starting to weigh on consumers and businesses alike as well. Ueda saying that there is a challenge to determine the neutral interest rate, but some of the economists that we're speaking with are saying that perhaps even 3 moves over the course of this year could be possible. So we'll leave that there, but as we said, the BOJ governor speaking at a conference in Tokyo. The theme of that is old and new challenges for monetary policy in the country. Let's shift now to the G7 gathering in Italy, because it ended with a communique that criticised China's global trade practices and hints at possible retaliatory measures. Our Chief North Asia correspondent Stephen Engel joins us for more. And Stephen, a lot of the wording that we heard from this was very hawkish and perhaps a little bit of a departure from the past where it's been a bit more neutral. So what do you think sort of justified such a ramp up in criticism?
Well, I think it's fair to say that this is probably the most assertive language that the G7 finance ministers have put in a communique as it regards to China and its trade policies. And it just shows the rising concern in places like Germany, which has, of course, a strong manufacturing belt in autos and the like. So there is concern that is not just, parroting what Washington says. There's real concerns in other G7 nations, including, of course, those in Italy, where they're holding this G7 meeting. And that statement really said it. While reaffirming our interest in a balanced and reciprocal collaboration with China, we express concerns about China's comprehensive use of non-market policies and practices that undermines our workers, industries, and economic resilience. They'll continue to monitor the potential impact of overcapacity out of China and will consider taking steps to ensure a level playing field. But again, there were voices such as the Chancellor of the UK Exchequer, Jeremy Hunt. Obviously there's a wide spectrum of different views within the G7 as expressed on the shores of that lake there in Italy. But the Chancellor of the Exchequer, Mr. Hunt, saying that it's really important that the world does not unintentionally creep back into protectionism. And this, of course, comes at a time when the Biden administration on Friday essentially announced it will reimpose tariffs on around 400 products out of China, allowing tariff exclusions to expire that had been spared up until now. So again, the world might be creeping towards protectionism, and that is something that the G7 finance ministers did address. And in that statement, in that communique, a sharply worded communique, kind of spoke out of both sides of the mouth, saying, on the one hand, we have to stay engaged, but at the same time, we have to stand up for our local economies as well.
That we have this first trilateral meeting between Japan, China and South Korea since 2019. We know that, openness of trade, economic issues trumping political differences is going to be kind of key in this in this set of meetings.
Yeah, I think this is an opportunity today when you have that trilateral meeting between, of course, Li Qiang and President Yoon of South Korea and Prime Minister Kishida of Japan to essentially talk amongst each other without the United States. But again, the United States looms large in these talks, obviously, as China will be trying to build better relations with two of its most strategic neighbors, South Korea and Japan, at a time when South Korea and Japan have grown closer with their shuttle diplomacy, which they have agreed to continue their warming of ties. And of course, South Korea and Japan have more recently, since the last time this trilateral was held 5 years ago in 2019, pre-pandemic, those nations, Japan and South Korea, have grown a little bit closer, more aligned with U.S. policy, especially the issue of export controls on advanced chips and advanced shipmaking equipment. Of course, Japan did sign on to the Biden administration export controls in the first round. They have so far resisted pressure to do it further. So again, this is something that Li Qiang obviously is there in Seoul to talk to his Korean and Japanese counterparts to try and persuade them not to go full throttle, of course, on what the Biden administration has done on those export controls. And again, also, we're hearing from the Nikkei newspaper that the three leaders are going to try and rekindle talks for a free trade agreement, an FTA, which, of course, is mired in a lot of different issues, including what Japan, according to the Nikkei, has levied against Beijing, and that is this, unfair use of subsidies to prop up state-owned enterprises and the like. So, again, whether an FTA is going to come to fruition is probably a long shot. Also, given the geopolitical concerns that are probably even more prominent right now than perhaps some of that economic common ground that they could possibly reach.
Our Chief North Asia correspondent Stephen Angle there watching that very key trilateral meeting. We'll get more analysis on those talks in Seoul with the Council on Foreign Relations. That's later this hour. Some of the other geopolitical headlines that we're following. And NVIDIA boss Jensen Huang and a bipartisan delegation of US lawmakers have arrived separately in Taiwan. Huang has often highlighted the role Taiwan plays in AI supply chains, while the legislators are due to meet with the president, Lai Ching-te. The visits come after China wrapped up its largest military drills around the island in a year. The US has since accused Beijing of military provocations. North Korea has given Japan notice that it intends to launch a rocket soon to deploy a satellite. According to Kyodo, the window is open through June 4. North Korea said it successfully deployed a spy satellite last November. It's a move that Washington and its allies say violates UN Security Council resolutions. Ukrainian President Volodymyr Zelensky is urging leaders of the US and China to attend a summit to discuss Ukraine's peace blueprint. The appeal comes after Ukraine said Russian bombs hit a store in Kharkiv over the weekend, killing 12 people and wounding dozens more. The peace summit is scheduled for June 15th to 16th on the back of a G7 meeting in Italy. Well, Israel is pressing ahead with its operations into the southern Gaza city of Rafah, despite a UN court ruling that ordered it to stop. The advance comes after dozens of people were killed in an airstrike near the city on Sunday. For more, let's bring in Bloomberg's Michael Heath. So the ICJ has, had obviously not much of an influence on this.
Yeah, the ruling was initially interpreted as Israel should stop, but the detail of the ruling is actually quite similar to what the US has been saying, in the sense that they don't need to stop, but they need to be ultra cautious with civilians. Israel says, of course, that it is being ultra cautious with civilians.
Is it possible to be ultra cautious with civilians in this area where they've ordered the civilians to go?
No, well, that's exactly right. I mean, this latest strike, Israel said that it was based on precise intelligence and that they've killed 2 senior Hamas officials, but the strike took place in an area where they hadn't ordered evacuations. It's on the western part of Rafah, and so you can sort of understand on one hand Israel doing this because it's going into Rafah to try and get rid of these last Hamas battalions and leadership. But at the same token, in a built-up area, you're always going to have large casualties from this. So it's quite a terrible situation that's going on there. But as for the court ruling, I mean, it's not going to stop too much going on there in terms of the fighting. But what it does is it shows this tightening coalition around, or tightening pressure around Israel internationally. It sort of doesn't have a lot of room for manoeuvre now. Whether it's Norway saying it's going to recognise a Palestinian state and some other countries as well, whether it's the UN, the US holding back supplies of weapons, there's a real sense now that Israel is looking quite isolated there. So really, they're going to want to wrap up this Rafah operation quickly if they can.
And so against that sort of backdrop where you do have that increasing sentiment or push against Israel's operations, how likely do you think it is that we see this being or reaching this matter, the United Nations Security Council, and can we still count on the US to support Israel in that?
It's a really good question, Annabelle, and of course any country can send this to the Security Council, and I mean the Security Council in a sense is a toothless tiger, but it can theoretically put sanctions on Israel. Israel will rely on the US vote, sort of as you imply, and you can't imagine a US administration, despite their frustrations with the Netanyahu government, allowing this to go ahead. So they would veto it, but I think they'd probably cause a little bit of pain if they can to Israel, or try and use it at least to extract some concrete pledges from Israel in terms of how it's going to operate in Rafah. I mean, last week there were signs that the US was a bit more comfortable with how Israel was operating, that it was trying to evacuate people before it moved in. But the strike on Sunday in the middle of a built-up area, in an area that hadn't been evacuated, sort of throws all that into doubt now.
And of course, at the same time, Ukraine is sort of begging for global attention to at least partly shift back on them.
Yeah, that's exactly right. I mean, you've got Russia fired, we were talking about these missile strikes as well. Russia fired a glider bomb that went into a department store in Kharkiv, which is the second largest city in Ukraine. Russia's sort of trying to attack around that area. There's a lot of Russian speakers in that territory as well. And Ukraine, obviously, it's in a sort of slightly better position in that Congress has approved this aid, but it still hasn't come through, and it's being rationed. And Ukraine is also trying to get up this conference in Switzerland in June that were referred to earlier in the headlines. And it can't get the US president or the leader of China to attend that, which is a real concern, because for this to have any sort of influence or power with Russia, it's going to have big players there. Russia respects strength, nothing else whatsoever. And if China was on board with this, then it would listen, definitely. But if you're not going to have senior leadership there, it really becomes problematic for Zelensky going forward.
Bloomberg's Mike Keith there. More to come here on Daybreak Asia. This is Bloomberg. Let's take a look at our futures, and Europe opening up, and of course a little bit of lack of guidance that we see in terms of US markets being closed for a public holiday. But this is the picture. We see a little bit of weakness there for the Euro Stoxx 50. DAX futures are also on the back foot at this point. We've seen sort of a little bit of outperformance when it comes to tech and industrials. The UK has been quite weak, though, going into the start of this week. This is Bloomberg.
French Finance Minister Bruno Le Maire says the G7 is united in its concern over the threat to the global economy from China's industrial overcapacity. Speaking from the group's meetings in Italy, Le Maire also confirmed his commitment to funding support for Ukraine.
We are on the right track to get final approval by the G7 leaders summit. The Holy Grail is to ensure long-standing funding for Ukraine. And make no mistake, the G7 countries are fully committed to provide long-standing political and financial support for Ukraine. So there are many options on the table. We will work on those options to find the best one. We need to have the most solid option from both a financial and legal point of view. But I want to leave no uncertainty. We will find an agreement and we will provide to Ukraine the necessary funding.
In terms of China, where would you say that you sort of agree with the United States and disagree with the United States? Where in your approach do you think that there is total synchronicity, and where do you want to see some changes?
We agree at the G7 level that we have an issue with the Chinese industrial overcapacities. And this is not a question, anything against China. China is an economic partner. But we have an issue with the economic model in which China is producing more and more cheaper industrial devices. Because it could be a threat not only for the EU, not only for the US, but for the global world economy. And we need to address that issue. Having so many industrial devices for the green industry at a very cheap price on the global market could jeopardize the whole world economy and the growth in the world. So that's why we need to address the issue. We need to engage China, and we need to find solutions.
What is Bruno Le Maire's sort of recipe for unlocking the good of Europe without the bad of Europe?
Innovation, innovation, innovation. We should innovate before regulating. The lack of productivity in Europe should be a matter of huge concern for all the member states of the EU. When you are comparing the US and the EU over the last 3 decades, what is really striking is the fact that the gap between the US productivity and the EU productivity has been widening. I cannot accept that. And when we are explaining that we want more innovation, more risks, less regulation, less rules, less directives, it is for the view of getting more productivity, which means more prosperity for our people, more jobs, more factories, and more independence.
Debt levels in France. The IMF says more needs to be done. Your own fiscal council says that the plans lack some coherence. What do you have to do to get sort of that debt level under control, particularly with an S&P credit rating decision coming at the end of the week? Do you think that borrowing costs will go up in France?
No, I think that the summary of the IMF is quite clear. The French strategy to come back to sound public finances is the right one. This is very clear in the IMF report. It is the right one because our goal to come back under the 3% of deficit by 2027 is wise and appropriate, and because we have a very clear and I think a very credible strategy based first of all on growth. We have growth in France. Second, on the reduction of public expenses where needed, and that's exactly what we are currently doing. And third, on structural reforms. And the Prime Minister will be announcing in a few days a new reform on the unemployment scheme, which I think is the very clear evidence that we remain fully determined to stick to the path of reforms, to stick to the path of sound public finances.
French Finance Minister Bruno Le Maire there with our colleague Oliver Crook. Well, Chinese Premier Li Qiang and Japanese Prime Minister Fumio Kishida are in Seoul for meetings with South Korean President Yoon Suk-yeol. This is the first three-way summit we've seen since 2019 between these countries. Let's get some insights now with Sheila Smith, who's a senior fellow at the Council on Foreign Relations. There's so many aspects of this meeting, that are key, right? I suppose I'll start off with China. Obviously, a lot of domestic challenges, a lot of geopolitical challenges, given just some of the rebuke that we saw from G7 leaders when it comes to Beijing's industrial policies. So what are you watching out for in terms of the framework for China and Li Qiang as he goes into these meetings?
Thank you, Heidi and Annabelle. It's good to see you both. This is going to be a fascinating meeting to watch. It is, I think, a very positive step for the region that these three countries, China, Japan, ROK, are actually meeting. They're having leaders meetings. It's the first time since 2019. So the pandemic has derailed a lot of the diplomacy that we'd like to see in the region, and this is one of the pieces of that puzzle. It's a very different world today than it was in 2019, as you all know. So this will be interesting to see just how much the three leaders can address, first and foremost, the economic concerns, and I saw that in your G7 interview there. China is a little bit on the spot about its own domestic decision-making regarding its economy, but so too are the geopolitics of the region. This is a very difficult time, I think, for these three countries to find common ground. Prime Minister Kishida just came off a very successful state visit to Washington, D.C. President Yoon of South Korea has had a very strong partnership with the United States. And so I expect we will see a little bit of pushback from China about whether or not Japan and South Korea can put all their eggs in one basket, the U.S. basket, given the economic interdependence among these three countries. So this is a pretty formidable meeting. I'm not sure what they're going to say at the end of it, but they've had bilateral meetings already. All three have had bilateral meetings, and they've addressed both their common visions for the future, but they've also addressed their deep concerns about each other in the future.
And how, how I guess front and center will the deep concern over North Korea be, right? We're hearing that teams of Russian experts have been in the region to help with spy satellite developments. We've had notice of the satellite deployment as well. And, China is the economic backbone there. So do we expect that topic to be intractable in these meetings?
Absolutely. So the interesting thing about this particular trilateral is it began in 2000. It was decided that this was an important endeavor in 2008, and it was largely focused on trans-border issues, economic issues. But what happened almost immediately, even back then, was that North Korea was on the agenda. So I think Japan and South Korea will very clearly say to Beijing, we need your help. We need your leverage here on Pyongyang. What's interesting now, however, is, as you know, Pyongyang and Moscow have a slightly different relationship than they've had in the past with, the visit of Kim Jong-un to Moscow. And the North Korea, the role North Korea now plays in helping the Russians fight the war in Ukraine. So the dynamics, even among these three countries, Japan, South Korea, and China, are shifting because the larger global geopolitics have shifted. I do expect North Korea, especially the satellite launch that the North Koreans have already announced, will be on the agenda. I do also believe that both President Yoon and Prime Minister Kishida will urge Premier Lee to make sure that they are on the same page when it comes to the nuclear ambitions of the North. And I sense that there's also a desire for both South Korea and Japan to ask China to represent their interests when it comes to the abducted nationals that the North Koreans currently detain in their country. So yes, North Korea will be very much on the agenda. I expect to see it in the joint statement, although I don't know what China's response is going to be.
And is China's advantages in that relationship between Beijing and Pyongyang, does that become a source of leverage for China in this trilateral, especially because China is also really trying to stop that wedge being driven between China and the US and its allies in terms of its chip ambitions, Japan and North Korea as well, or Japan and South Korea rather?
Right. Now, I think in some of the preliminary commentary you saw out of Beijing prior to this meeting, it's very much expected that Premier Lee is going to ask for supply chain resilience, to work together on key supply chain resilience issues. This is something, of course, that the United States, Japan, and South Korea have put on their agenda. I think there's going to be an attempt to pull back a little bit the extent to which South Korea and Japan are economically focused on the Washington link. How successful he's going to be, I don't know. But I think there will be a desire to entice both Japan and South Korea back to the basic premise of their relationship, which is the economic interdependence, and supply chain issues are top of that agenda. The other piece of the puzzle, of course, is, and I saw this commentary coming out of the Global Times, which, as you may know, has a fairly strong tone to it, let's put it that way, about criticizing the United States for the distortions in the currency markets and for the strong dollar making the currencies of both South Korea and Japan weaker. So I think you're going to see a little push by China to point out that the interests of both of these two countries, Japan and South Korea, are actually more aligned with China's interests than they are with Washington's interests. So again, to be seen. I mean, we shall see when we see the the joint communique, just how much these issues are specified in that.
It's pretty clear what's at stake for China and why they're pushing for supply chain resiliency. But what is the sort of position of Japan and Korea going into these talks, given they also really depend on China for demand, for production facilities that are there? So what's the piece of that conversation as well?
So I think there'll be a lot of, what I thought was interesting to start off this way is Japan and South Korea in their bilateral meeting. The headline for that meeting was, this was a relationship of trust. So as you notice from your screen here, the extent of the size of the trilateral economic relationship among these three countries is substantial. You have a concrete figure here, but also in a different way, it's about 25% of global GDP. These are three economies to reckon with. On that, but that being said, disruption, therefore, between South Korea and China, Japan, China, trade is not what any of these leaders want, nor do they want disruption of foreign direct investment. And yet, the pandemic has shaken confidence in supply chain resilience between them and China. So you've seen a diversification of supply chain discussions and supply chain reassurance, I think, in partnerships with Australia, with the United States, obviously, but with other partners around the globe. So I think there is a certain concern that China cannot be trusted, and I say that not with any attack on China intended, but the pandemic shook people, I think, very deeply about this question of where and when and how supply chains can be confidently maintained. And I think it may be a little bit incumbent upon China to reassure Japan and South Korea that they are going to take steps to make sure that supply chain resilience is something that they see as a common interest, not just a national interest.
Sheila, with all of the conversation around, of course, in industrial policy and some of the challenges and conflicts that may arise there, do you expect specific conversations and outcomes when it comes to chip supply and chip strategy?
Well, you've watched, of course, South Korea has its own manufacturer, has its own capacity for manufacture, but you've also seen Japan move now in the direction of what we now refer to as friendshoring in the United States, of building its own capacity for semiconductor manufacture. For example, TSMC and Samsung has opened a research and development hub in Yokohama. And so I think both South Korea and Japan have already begun the investment in ensuring, especially on the semiconductor side, but also beginning to think about critical minerals, other kinds of supply. I expect that will be very much in the midst of the conversation. The Trilateral Summit is going to be this question about access to critical minerals that are available only from China. But I think you've seen the diversification already start. The chips piece, of course, is the redundancy is key, and it may not all need to be manufactured along inside the U.S. market, for example, but I think all of them, all three countries, United States, Japan, and China, United States, Japan, and South Korea, feel that friendshoring, bringing manufacturing base a little bit closer to home and under national control, I think they're pretty persuaded that that's the right strategy going forward. Now, China could, offer all kinds of incentives, but I don't think you're going to see Japan and South Korea really move away from the investments that they've already begun to make.
Taiwan, obviously, at the epicenter of the chip supply chain story, and we see that bipartisan delegation of US lawmakers as well as NVIDIA's Jensen Huang in Taiwan. Do you expect this to be addressed in this trilat? How do they navigate the issue of Taiwan?
It's a great question. I wish I knew the answer. I would love to be a fly on the wall, because this is going to be central to. I don't think you and we're going to see anything in the joint statement that has the name Taiwan on it. But I cannot imagine that these three leaders will sit down without acknowledging both the industrial policy impact of Chinese pressure on Taiwan, right? The supply chain issues that you referenced, but also the fact that the PLA is conducting, basically blockading exercises around Taiwan within a week of the new president being inaugurated there. So I think you're going to see both President Yoon and Prime Minister Kishida privately express their concern about the intentions of Chinese behavior, both in terms of the way it's dealing with Taiwan as a neighbor, let's put it that way, but also the way their military is attempting to pressure the trade impact that they could potentially have on Taiwan. So I think it's going to be in the conversation, whether we all get a chance to look at what the conversation wrought at the end. I mean, what they came up with. I'm not terribly confident we're going to see that, but I can't imagine it won't be on the table.
Our Sheila Smith there. Thanks very much for your time this evening, Senior Fellow at the Council on Foreign Relations, and we'll have more to come on Daybreak Asia. This is Bloomberg. Well, Fidelity International and BlackRock are looking towards emerging markets, including India and Indonesia, as demographics begin to play a bigger role in investment decisions. For more, Bloomberg macro strategist Marcus Wong joins us. And Marcus, I mean, it's very clear here you've got the challenges for the likes of China, Korea, Japan versus what you see in India and Indonesia. It really is a key question now for investors.
Oh yeah, definitely. I think this has all become more real in a sense. If you look at last year, India's population actually exceeded China's for the first time ever. So again, looking at World Bank projections, for example, India and Indonesia's population is expected to grow by around 15% by 2050. In comparison, if you look at China, for population growth is actually expected to contract by close to 10% instead. So it's clear that the demographic dividend over time will play a more important role. And it's just not just the absolute population itself, but also the working age population, i.e. people who are fit and healthy to work essentially. And on that respect, both India and Indonesia's working age population is expected to remain relatively younger compared to China over the coming decades or so. Other analysis, for example, Backlog Research Institute, they did a study which showed, that the average price to earnings in the stock market, actually quite closely correlate with the working age population. I.e., if you have a younger working age population moving forward, this will actually be positive for stock valuations. As a result of that, we have Fidelity was also saying that they are rather bullish on India and Indonesian banking stocks, for example, because banking stocks in both economies, or in general, basically correlate quite well with nominal GDP in emerging markets.
It's demographics quite simply, but it's more than that advantage, right? It's the labour market, it's productivity. Are we seeing favourable policies that can actually, make the most of the demographics?
Excellent question. I think, of course, the population itself is good, but that is not the, in a sense, that the main attraction, in a sense, that the thing that has brought this all to the fore. If for example, you look at Indonesia, just in 2023, the government actually passed an omnibus law, which essentially makes job creation more investor friendly. I think it's very important for Indonesia, which is was previously known as a country with rather Byzantine labor laws. If you look towards India, for example, back in 2019 and 2020, the government actually approved in Parliament, a simplification of its labor laws. Of course, since then, he has seen some, pushback from unions in terms of the actual execution itself. So a lot of analysts are actually looking towards this general election that's ongoing, and whether the government will have enough political will and political power to push these policies through. Of course, there's some discussion in the market now whether Modi and his coalition will actually meet its 400-seat target. No, it seems at this point it's like it may not hit the foreign receipt target, but as long as there's enough political will, we could actually see these possibly these labor laws being actually approved, and these will actually make hiring and firing easier in Indonesia. So in a sense, demographic dividends actually work well with these so-called structural reforms that have been working its way through the systems in India and Indonesia.
That was macro strategist Marcus Wong there. Taking a quick look on how markets are faring so far. We're 50 minutes into the session and we're actually seeing a little bit of upside coming through this morning. So on Friday, it was that story of US consumer inflation expectations. So it's trended lower. And so that really boosted these expectations that the Fed is going to be able to cut rates later this year. So we saw a US stock snapping a two-day decline and just closing a little bit higher. US markets will be shut Monday, but we do see futures fairly steady so far. Broadly, the index in Asia is pushing a bit higher, though we are coming off what's been the worst week in more than a month. A quick check as well on what's happening in Japan, on Japanese assets in particular, because we have been tracking the Japanese 10-year yield sitting around a first time rather above 1% in more than a decade, but sitting at a 2012 high right now. We have been hearing from the BOJ governor as well this hour. He's essentially saying that there is that need to re-anchor inflation expectations at 2%, and there are some challenges that are uniquely difficult for the Bank of Japan compared with the global counterparts. And of course, we know those, Haidi, because their rates trajectory is so far away from global norms at this point in time. We'll have more ahead. This is Bloomberg.
Some of the corporate stories that we're following today. A Qatar Airways flight has hit severe turbulence over Turkey, injuring 12 people. The Boeing 787 landed safely as scheduled in Dublin. Qatar Airways says it's investigating the incident. Last week, a Singapore Airlines flight made an emergency landing in Bangkok after severe turbulence killed one passenger and injured dozens of others. Asia's richest man, Mukesh Ambani, is setting his sights on Africa with a new telecoms venture. A unit of Ambani's Reliance Industries will provide key network infrastructure, applications and smartphones for the Ghana-based NextGen InfraCo. The company is planning to provide 5G broadband services to mobile operators and ISPs by the end of this year. A group of minority holders of insurer Great Eastern are resisting a $1 billion takeover bid from OCBC. The group of more than 100 shareholders says the offer to buy 11% of Great Eastern at around 25 Singapore dollars per share is too low. OCBC says the number reflects a roughly 40% premium over the price in both the month and the year before the bid announcement. That is it for Daybreak Asia. Markets coverage continues with the start of trading. The China show is next.